or major, not your first time living on the earth.
In past life, you were a healer.
Good afternoon, everyone, and welcome to today's edition of Business Day SME Clinic. I am Ethel Adorno, and I am honored to be your moderator for this insightful conversation. Today, we would be discussing a topic that is very, very crucial to every business, a topic that sits at the heart of small and medium-sized businesses. So we're going to be discussing financial literacy, with a spotlight on cash flow management and basic financial management. So whether you're starting off your business or trying to structure it better for growth, this is the rightful conversation. And I will urge you to, grab your pen and paper and sit while we dive into the conversation. So today, I've got brilliant speakers with me today. Of course, I won't be doing it alone. So permit me to introduce our guest speakers to you all. So joining us today is Dr. Akiwande Ademosu, who is a well-known social entrepreneur and advocate for fair business practices with over 30 years of experience in finance. In 2007, he launched and led Nigeria's first structured consumer finance company, which has since become a key player in the industry. In 2023, he co-founded Bravewood Financial Service Limited, which in 2023, he co-founded Bravewood Financial Services Company, which specializes in providing personalized investment and loan services to SMEs and individuals. Akin also serves on the board of Internal PLC and has received numerous awards, including the Harvard Business School Nigeria Alumni General Leadership Award. As a Harvard-trained leader, he brings a wealth of knowledge on building sustainable finance structures and helping small businesses to thrive. Thank you for joining us today, sir. Thank you, and we can't wait to hear what you have to share with us today. Please, if you can hear me, say hello to our listeners.
Hello, listeners. It's my pleasure to join this conversation. Thank you so much.
Thank you, sir. So next we have Olapeju Wanganga, who is a finance expert and the founder of Pluto's Page Limited, a leading bookkeeping and financial management firm dedicated to helping SMEs and startups streamline their finances for sustainable growth. With over 10 years of cross-industry experiences in FCMG, oil and gas, healthcare, and luxury goods, she has worked with top organizations like Russell Smith, Bella Niger, Pressgate Limited, driving financial strategies and operational efficiency. Passionate about empowering small businesses, Olapeju launched Pluto's Page Limited in 2020 to provide tailored bookkeeping, inventory management, and financial advisory services. Through her work, she equips entrepreneurs with tools and knowledge to make data-driven decisions, improve profitability, and scale effectively. Thank you so much for joining us today, ma'am. Please say hello to our listeners. Okay, so joining us as well is Kolawole Omaniyi, who is the Chief Financial Officer at Smart Cash PSB by Airtel. With a background at KPMG and PwC, he brings over 15 years of experience in financial strategy. Under his leadership, Smart Cash achieved profitability through intentional planning and forecasting, and today he will be sharing how SMEs can do the same. Thank you so much for joining us, sir. Please say hello to our listeners if you can hear me.
Yeah, hello listeners. It's such a pleasure to be here. Such a pleasure to also be here with my senior mentor in the business, Dr. Demoson. I'm sure we're going to have a very robust conversation.
Thank you so much. All right, so let's dive straight into today's conversation. And before we proceed, I would like to call on our first speaker to give us a brief presentation of what he has for us today. So, Dr. Akiwande, please, you can proceed with your presentation. Thank you once again for joining us.
Okay, so thank you so much. So let me start by thanking Business Day for putting this together. It will be underserving the nation if we undermine the importance of SME in the development of the country or any nation whatsoever. I also want to thank our moderator, FL. Thank you so much for your diligence. My other speakers and participants, Olapeju, it's a pleasure to meet you here. Very good brother, friend, Kolawole, always a pleasure to tap from your wealth of experience. Very detailed, intelligent, and quite a handful. Kolawole, yeah, thank you. So what I'll just do in my presentation is actually to just arouse some conversation or interest in this very important line that we've chosen. So as a starter, so I'll start by asking a question. So to some SMEs, the question is, someone is stealing my money. Someone is taking my money away. So I shared an example which I project here that, if your business makes 300,000 a month, but as in sales, because what I've done is to from the lowest experience in the industry, so that when you take the lowest, you can build on it. When your situation is not that bad, then you know that there's a lot of hope for you. So imagine your business makes 300,000 a month, but by the end of the month you can't pay your rent, restock, or even nothing seems to be going. And you're asking yourself, someone must have been stealing my money. To some SME, operators, or to some business owners, there's a thief somewhere. But I just want to say that while we're not, totally setting that aside, but the most important is actually our poor tracking of our, funds or our cash or our sales or the financing in the business. There could be leakages, there could be unnecessary expenses, and I'll share a bit of those contexts as we go into this because I did my research, doctoral thesis on SME funding and why they don't have those funds. So there could also be this issue of, which is predominantly what we see in SME, mixing what they call, commingling of their funding. So they mix their personal spending with the business spending. So someone shows up, a family member, a friend shows up and say, "Oh, give me money there, let me just buy soft drinks. Give me money there, let me buy snack. Give me money there." All these things create leakages because if your worker sees that you're not tracking, it's possible for them not to also track with you. Just imagine, you in that scenario and what that would mean for you. So we all go through this experience. So let's quickly touch on understanding financial literacy. To some people, financial literacy is one big word that could confound whoever does not in that financial space. And I know that someone like Kolawole will try to break it down for us. Realistically, financial literacy is not a big deal. It's all about, knowing how your money works in your business. How does the money work in the business? It starts with your basic knowledge of how much is my sale? How much do I make in my sales? How much do I spend? You can do this on a daily basis. You can do this on a weekly basis. You can do it on a monthly basis. But is the question you ask from your activities in your business that actually determine, your financial literacy level. And then you now look at that and say, okay, this is my profit. or you want to check your gross margin and things like that. So in a way, it's knowing how your cash move within your business. When it comes in, when it goes out, what is left behind. And in understanding the way money flows, we're left with profits. When you take your sales expenses and then you see your profits, instantly you know that that is your financially literate. From that moment, I'm trying to make it as basic, as simple as we should have it. So a financial literate SME operator would naturally know few things. One, they will know that profit is not just cash, that your cash in hand does not determine your profit. They will also know that, selling a lot can actually still make you to be broke. That you can sell a lot and be unprofitable. You can sell a lot and still be out of business. So when you're financially literate, what you're doing to yourself is that you know exactly how things are moving in your business. As a financial literate, SME operator as well, you know that keeping your number helps you to make smart or smarter business decisions. Because if you don't, you can see things going up, whereas you're going down because you're not tracking. A financially literate SME will also know the basic elements or the basis of simple bookkeeping. And when we say bookkeeping as well, to some people, it's a big deal. It's a big word. Bookkeeping is actually just keeping your paper, or what you can call your book, of how things are going on in your business. So, let's just go through our conversation for today, which has to do with cash flow. So in conversation, let's say, what is cash flow in the real sense? There's something that happened to me about 20 years ago, 25 years ago, when I was in Okeari market. I spent a lot of my banking experience in Okeari, about 10 years of my career in Okeari. I was just in that place. I see traders making making a lot of sales. They're selling in millions. But at the end of the month, they're always rushing to the bank to ask the bank to fund them, to give them money either for rent or their children are going to school. And from that moment, I start understanding that sales is not good business. As in, you can have good sales, but have a bad business. You can sell if you're not tracking and your business is still not going. So in most cases, a lot of them will have fallen into the trap of negative cash flow without knowing. Either they have customers owing them, or they're not really managing their business well. And this is what I've learned. I've learned that money that is coming in is not actually the same thing as money that is staying in. Your money can come in, but it may not stay in because you're selling other people's product for them. You're just an agent of sales. You do not have a business. So cash flow is simply how money comes into your business and how money goes out of your business. It is the lifeblood of your business. It's like you don't have food to eat as a person. And cash flow, just imagine yourself, being given 10,000 naira, and you use your right hand to put that money in your right pocket. And then anytime someone shows up before you, you use your left hand to take money out of that place. You're not even calculating what you're taking out of it. At some point, you realize that, maybe the most important need now comes to you, and you try to put your money in your pocket. The place is empty. So you're not tracking the outflow out of that, your inflow. Your inflow into your pocket, cash inflow into your pocket, is the 10,000 naira that you put in that pocket. How it goes out is how you're spending it. If there's no tracker, you get into trouble before you realize it. So positive cash flow means that you have more money coming in than the money that is going out. And in negative is the reverse. So you have less money coming in than the ones that are going out. So, for the people over there, I'll just share this with you. If you go to our website in Bravewood, .ng, and you check those things, you see business tools there. You can just imagine if you're SME and you're listening to this, just think about your sales this week. How much did I sell? And do that exercise for yourself, just to track, for you to know you can actually be financially literate. All you need to do is just to follow these simple steps, just about 3, 4 steps. How much did I sell this week? How much does it cost to buy the goods that I sold? How much did I spend in the process of selling it? From that moment, you start saying what have I done? I've not told you don't know. I've only told you how to arrange what you've always done. Arrange these things in sequence and everything will flow through. So let me share this lesson. It's just a small case study, very small, very tiny. Like I said, I'm taking it from a market woman in the field who is an SME. So the woman came to our business. Of course, the number came to the business and she was running a small business. And without knowing, because of the way she's been managing the business, she was losing money, even though she was making sales. All we did for her was just to say to her that, okay, why don't you download Bravewood Money Tracker? It's a daily, weekly money tracker. Download it and just monitor what I've just said now. And without knowing, because she was losing about 10,000 naira, of course, like I said, the number is modified so that we don't start tracking people, and what she did at the end of the month was that she's recovered from losses to now profitability just by taking those basic steps. So the question for us is this: is my business viable? And to answer that question, you have to be able to, there's a form also you can fill, you can download on our website. It's business plan form. It's a basic business plan form. And the question the business plan will ask you, will answer for you in knowing whether your business is viable, whether you should even remain in that business or do something else, is to, what do I sell? And the next thing is how much do I spend every month? How much do I sell? How many customers do I have per week? What do they pay me? What's my average ticket? And how much money am I making every month? Am I making profit every month? Is there something left for me at the end of the month? Yes or no? And then, do you want to expand? Why and how and where? This is how to test the viability of your business, whether you can scale it or you can't scale it. If you answer this basic question well, then you can now say, I have a tested, business that is viable. The next question is, am I ready for a loan? A lot of people will say, SMEs will say, oh, it's because I don't have money, if I can only get a loan. But my first question is this: before you collect your loan, why don't you do a basic test? Do you make money monthly? If you don't have a margin, if you take loan, you're going to run into debt because you don't have anything to pay the loan. So getting the money is not is not your problem. It's actually, what do you do with the money? And so the next thing is this: do you have a bank account that can track or that can speak to the activities of your business from beginning to the end? Because we don't know what you're doing. You can tell us, oh, I sell a lot. That is just your own statement against the market. But the question, what we want to know is this: when you sell, do you track? Do you pay your money to the bank? Do you have a statement of account that we can check? The other thing is that, do you have a repayment plan? How do you want to pay back the loan? If you don't have a margin, if you don't have a profit, and what is the thing you want to attach that loan? So there must be a borrowing that is attached to, the money you're borrowing must be attached to a project. And the next thing is that, do you know how much you need and for what? For some people, it's just application. Oh, my friend applied for 1 million. I need to apply for 1 million. Realistically, what does your business need? Do you really know how much? Because if you get too little, it's going to be a waste. If you get too much, it's going to kill you. So you have to be able to track this. If you answer no to any of this question that I just gave you, then you are not ready yet. You need to first and foremost work on your data and the way you track your business. The next one is, who is stealing from your business? Who is stealing from your business? Just use those basic daily trackers that you can download from our website, bravewood.ng. And what the trackers will help you to do is to be able to record your daily sales or weekly sales or monthly sales, record your expenses, and also to know how money is taken out of your business. And then the balance that is left in your business is what you can use for the business. I want you to note this: if at the end of it, your account doesn't balance, then you know instantly there is a leakage, either a leakage from you or from one of your staff, and that will help you to know exactly what to do. So as I try to round up this, you can have a sustainable habit of growing your business. All you need to do, separate your personal expense from your business expense. If you commingle, if you mix it together, it's going to run you into trouble. Put yourself on a pay. Have a check that you collect from your business. Let your total expenses be known. Record your sales and daily expense daily and all that. You can follow all this one when you get to one of those training. And what do you do next? As a tool, there are several tools you can see on our page. Several tools, about 6, 7, or 5 tools you can download as SMA that will help you to start tracking your business. You need to know the business plan. There's a tool there. You need cash flow check, health check, your mobile tracker, your loan readiness tracker. You can actually track your receivable and payable accounts. There's a form on our system that you can download and do that. And you can join everything that we do. But on the closing message, I'll say this to you guys. My name is Akin. You can check this out. 2007, I pioneered the entire non-bank financial services sector with 200,000 that FCN Group invested in Credit Direct. As at the past few weeks of last few months, that business is valued at about 158 billion today. Those things don't happen by accident. It wasn't magic. Anyone can do it. All we did at that time was all about the people, the team you put together, all about the system that runs your business. What we're talking about today, the structure, your bookkeeping. It's about discipline and being able to make the right call. Again, 2023, mid-2023, I co-founded Bravewood. Today, that Bravewood is growing in leaps and bounds. And all we focus is all about investment and loans to predominantly SME. So you can follow us, so building a powerful and great business is not a magic or a miracle. It's all about being intentional about what you do and how you do it. So thank you so much for the privilege to just share my thoughts, and we can go into the question and answer later. God bless you.
Wow, wow, wow. That was so amazing, Dr. Akinwande. Thank you so, so much. I love the fact that, you broke the topic, that you broke it down, that, somebody that is even in secondary school and trying to run a small business could understand the topic of today. Thank you so much. I would like to call on our next speaker, Olapeju, to also share her own presentation before we dive into the question of the day. Thank you. So while we wait for her to share her screen, I would like. Okay, you're here. Yes, I can.
Yeah, can you see my screen?
Not yet.
Okay, I think I'm sharing already. Let me try and reshare.
Okay.
How about now?
Still not showing.
So how about now?
It's up now.
All right. Yeah. Good afternoon, everyone. I'll just try and make it very short because my network is fluctuating. Okay. So I think the last speaker did justice to everything. So I'll just go over what I have here. So why financial literacy matters? I think he had explained what financial literacy is all about, and so out of out of 10 small businesses now fail due to poor financial management. Now, there are different reasons why small businesses actually fail, and then I divided into two, like external and internal reason why it happens. So the external factors could be like things that they don't have control over, like let's say policy and uh, maybe there are different things that let's say like inflation and all those things can actually have affect the business negatively. But the internal things which I feel the business owners actually have control over, make most of all the small businesses, it's due to lack of financial management. So, and they are internal, they are things that they can actually control. So then the next one is many people business operates without knowing if they are profitable. And then another one is financial literacy is your business survival kit. So I think for you to be able to survive as a business owner, you need to understand, have that knowledge of financial management. So cash flow is simply the movement of cash, movement of money in and out of your business, how money is moving in and how money is going out. So the cash inflows could be your sales and loans and investments. Then cash outflows are things like your purchase and salaries and rents, which you do on a monthly basis. Then I'll go to the difference between cash flow and profit. What is cash flow, what is profit? So now like the last speaker explained, you can be profitable and still run out of cash. Yes, so it's very, very possible. So business can be very profitable and still run out of cash. That is, at the end of the day, let's say you did your income statement, you are seeing profits, but you don't have cash as of that day. Like there's no, you're having zero balance, or even you're even owing your banks or maybe your creditors, but your business is showing that there's profit there. So it's very possible that your business is profitable and you still run out of cash. So now, of course, profit is like revenue minus expenses are on paper, but your cash flow is real time money movement. That is how money is moving in and out of your business. So, what is important for every business owner to do is to monitor both. You need to monitor your cash flow, you need to also monitor your profit at the same time. So, cash flow is like, I always tell my client that cash flow is like it speaks. So you will know what, like once you look at your cash flow statement, you will know what it's talking about. You will know when you are out of cash. So when you should be out of cash, let's say you have a cash flow budget, you will know when you are cash trapped or when you have surplus. Now the next thing I'll talk about is tracking cash flow. There are different tools how you can you can track your management. It won't work. So you need to start from the scratch, which is bookkeeping. So the question is that, do you do your records on a daily basis? Do you keep records on a daily basis? Do you have the tools that you use in keeping your records, how money is moving out and how money is coming in? For instance, there are different software that you can use to keep track of your daily transactions. Like we have a software like from our company, we have a software for small business, which is Pepcode, a digital bookkeeping software where you can keep track of your daily records, like your invoices, your expenses, and uh, your purchase as well. Then another thing that also help business owners. So there's some business owners that they're not comfortable with software. Let's say that, for example, people in the market women, so it's just very few of them that have a like they're able to use a mobile phone to do things like help to do record keeping the invoices and the expenses and everything. So some people in the market, they like to use manual things like writing on their notebooks. So we discovered that amongst market women, and we decided to come up with another product that help market women, which is OWA. That is a manual booklet where women can actually keep track of their records. So the manual booklet is for them to keep track, like their purchases, their inventory, and their sales, like that. Then another thing is your simple cash book templates that you can actually use to see how cash is moving. Like for example, you look at the dates, the descriptions, and the inflows and outflow and the balance. So these things, you can't get your cash flow statements right without this source document, that is this raw data like bookkeeping. So you need to do your bookkeeping well for you to be able to get your cash flow management right. Then the next thing I'll talk about is the financial documents every businesses need. For instance, the first one is you need your cash book, you need your profit and loss statement and your debtors and creditors list, the inventory tracker, and your sales summary. These things are what will help you keep your cash flow management well, and you are able to make decisions based on that. Then the next thing I'll talk about is what are the common cash flow mistakes to avoid. There are cash flow mistakes that businesses need to avoid. The first thing is mixing personal and business funds. So some businesses, they put their personal money with their business funds. Some of them even use their personal accounts as to receive money from clients or customers. I feel that is very wrong, because that way you can't even separate your own money from the business money. So the first thing you need to do as a business owner is, once you start a business, once you register your business, you need to open a corporate account where the money will be going into. So that way you are able to separate your business money from your own money. And the next one is spending before earning. Some business owners, they like to spend before they earn the money. Like, they are expecting some money, I'm expecting some money, but they're not spending based on the anticipation of money coming in. The real money has not come in yet, but they are already spending ahead of time. Like, they're already spending before the money will come in. So that way it's wrong. You need to properly, you need to be sure of the money that is coming in before you start making some expense. Then the next one is ignoring receivables. There is people owing you. If you're not keeping track of your records on a daily basis, there's no way you track people that are owing you. There should be a number of days that are meant to owe you, how you cannot follow up. But when you're not keeping track of that, there's no way you'll be able to follow up. Then the next one is not budgeting for irregular expenses. For instance, if you have a budget, if you have a proper budget, you need to have a what is called uh, like things that you don't even expect to come in. So you need to plan for that as well, so that once those things come in, you're able to make that expense. Another thing is irregular expenses like taxes and repairs. Like, for example, now you need to pay tax, then repairs. For example, let's say you have an equipment that you're using for your business that suddenly broke down. You're meant to keep make plans for that as well. Then the next one is what are the basic financial management tips? You have to separate your business accounts, which is very, very important as a business owner. Once you start a business, you need to register your business, and also have a different bank account from your own personal account. Let the business has a personal account, and your own personal account is separate. It's not the same thing. Record daily, no matter how small. So before you can get cash flow management right, you need to record daily. Then the next one is budget monthly. You need to plan. You have a cash flow budget. You need to have a budget for your business. How much are you expecting on this month? How much expenses are you meant to incur this month? Then the next one is you have to review your budget. Like, you look at your actual and your budget, and look at the variance. What is causing the variance? How do you mitigate against this? What's it called? Let's say the variance is negative. What are the things that went wrong? You understand? Or let's say the variance is positive. What did you do well that makes you do more than what you are expecting for that month? So that's how you should do as a business owner. So you need to review it weekly or bi-weekly for you to. Because I always suggest weekly or bi-weekly, so that you don't go too far. Let's say, for example, you are negative. If you are doing monthly, or let's say quarterly, you have gone to, like, you have accumulated negatives. But when you are doing weekly or bi-weekly, when you have negatives, you are able to quickly work your way around it for you to be able to do well than last month or last week. The next one is seek help. Seek help. Ask people questions. Let them help you with trainings and tools. So support that we have available in our company for business owners are, we have different tools for them to keep records, like their bookkeeping records, which is the bookkeeping software for people that are literate, that are able to operate with computer, or let's say their mobile phones. Then for those that are in the market, that because those people should not be excluded because they cannot operate, let's say an advanced technology, let's say phones or something. So we also have a booklet for small businesses, that is people in the market that can keep that booklet is to guide them on how they do their records. Of course, we do that with agents. We have agents in different markets that helps them with this daily records for them to see if they're making profit or loss. Not just that, they also monitor that cash flow and track it. So that's what we have. Then we also do advisory supports for businesses, and also we have our communities where people can actually get to access these tools and these booklets for them to also help their business. So thank you very much. So I'll be waiting for questions, and thank you very much.
Thank you, Olupejo. Thank you for that amazing presentation. And I like the fact that our two speakers already have spotted the fact that some business owners, some small businesses do not know the fact that they have to separate their personal accounts from their business account, which is something that I see very well in our small business owners. And I like the fact that this topic is something that is addressing it. Okay, so having said that, we'll dive straight to the questions for today. And I would like to start with Omoni. Okay, so the first question to you, Omani, is what are the key components of cash flow management for SMEs? We have heard the other speakers speak more about cash management, what it means to business owners. So now I would like you to tell us the key components of cash flow management for SMEs. Thank you.
Okay. Am I audible?
Yes, you are.
All right. So, good afternoon once again, and thanks so much, moderator. You're doing an amazing job. It's very difficult to speak after my, two wonderful speakers they've covered everything. Like I said earlier, I consider Dr. Ademusu my mentor, in this field. Yes, what he said about, starting up Credit Direct and, pioneering the entire lending, personal lending business in Nigeria is very true, and his record speaks for itself. But just to add a few things to some of the things that they've said in terms of cash flow, just to broaden our scope. By the way, like has earlier been mentioned, I currently lead the finance team of Smart Cash PSB. Smart Cash is owned by Airtel. Prior to my current role, I was CFO at Credit Direct, where Dr. Ademusu was managing director as well. And I've also spent a couple of years in KPMG and PwC along the line. But speaking specifically, having worked in, should I say, medium organizations. So, for example, I spent about 5 years in Rem Money, and of course, we know what Rem Money does. We give loans to people who need loans. We also take money from those who have excess. So obviously, in an organization like that, and of course in an organization like Credit Direct, you can imagine you have to do daily cash flow management. So you have to have there's a level of skill that requires, to be able to make sure that those organizations don't run out of cash. It's almost like a taboo, for you to not have money to pay salaries, or for you to have tax liabilities, and you are running helter skelter. So you have to plan appropriately, and right, and that's where understanding cash flow becomes important. What is cash flow really? Cash flow really is moving money, in and out of an organization or an individual's pockets, right? There are two types of cash flows. You can have positive cash flow or negative cash flow. Positive cash flow is where your inflows, exceed or or are more than your outflows, right? Negative cash flow, which is not the one we want or not the one we're advocating for, is where your outflows are exceeding your inflows. And my two speakers before me have already spoken, about it, and just to now answer the question that has been asked, how do you then manage your cash flow? I think the last speaker did justice to listing some of the things that have to be done. But I think one thing that is critical is cash flow management. You need to have a cash flow forecast, right? What does a cash flow forecast mean? Cash flow forecast simply means planning for all your inflows and all your outflows, right? So that even when you're going to have a shortfall, you know ahead, you can anticipate it ahead, and you can then make necessary, you can initiate necessary actions to make sure that you will not run into trouble because you have planned ahead. How do I mean? So, for example, what are the various sources of, cash inflows? So you know that for a fact that cash inflows can come from maybe personal savings, It can come from maybe loans from a friend, a family member, or maybe an institution. Institutions like that the ones that we have spoken about earlier. And then revenue sources, so you can earn revenue whether you are selling something or you are providing a service. Revenue that you get from those from the business activity that you are involved in, right? Those are the sources of inflows. What are the sources of outflows? A good example is transportation. A good example is energy costs. You need to run fuel, you need to run diesel to power whatever machines that you are using to run your business. A good example is maybe you need to pay wages and salaries to some of your some those who work for you. Another very good example is maybe even the repayments of the loans that I mentioned earlier. So you need to be able to plan when, so the timing of all of these activities, all of these cash activities, they have different timing. You know when you're going to have to pay your salaries. You know when you're going to have to pay tax. You know when you are expecting to receive monies from your customers and your clients. One needs to plan, and that's why I talked about cash flow forecasting, cash flow planning. You can have a 1 month. You can start from, depending on how small your business is, you can just do a 1 month forecast. 1 month forecast is, okay, you're heading into the month of July. From the 1st of July to the end of July, you really want to be able to plan out your inflows and your outflows. And you can anticipate these things, right? Such that if you already envisage that you're going to have a problem at the end, maybe due to delays or due to certain exceedances, the outflows will be more than the inflows. You can plan ahead, maybe by quickly looking for stop gaps, maybe looking for a loan, maybe quickly asking somebody to borrow you money ahead so that your business does not come to a halt at the end of July. You can have a 3-month forecast. You can have a 6-month forecast. It all depends on how big your business is and how you want to look forward and how far, into the future you want to plan, right? So I think cash flow planning is very, very critical, and, basic tools are available out there to help you just plan your inflows and your outflows. You can do it manually depending on how the level of business that you're running. And of course, you can also get advice, from financial experts. Just like my last speaker said, seek help. So there's no harm in seeking financial advice or financial help from experts, right? And like my sister mentioned, and like Dr. Demusu mentioned, you can also, consult their companies, to help you out with respect to cash flow management, because it's very critical. It's very critical, right? My sister also mentioned bookkeeping and up-to-date record keeping. It's very important. It's very important to keep records. Sometimes there's something she also mentioned, try as much as possible to separate, personal accounts from business accounts. And some might say, oh, I don't want to open a corporate account, or I don't have my business is, maybe I'm into makeup, or maybe I'm into hairdo, and I don't think I'm ready to have a corporate account yet. You can just open a different account, a different savings account, where all that will be going into that account will be strictly business, which is, oh, you collected money from your customers, the transportation expenses you incurred, purchase of your makeup accessories. A separate account, because it helps. It helps you to know how well your business is doing. It helps you to know when you need to then dip into your own personal money to help the business, and it just helps to know how well your business is doing. So it's a very important point, right? That also needs to be made. Another thing to also mention is, cost management. Cost management is also important, because sometimes when we are incurring this cost, we lose track. And then it's at the end, when we already incurred this cost, that we then realize that, oh, the business is in trouble, right? So it's important to also manage your costs. Try to get the best out of some of your expenses, because that's where I've seen a lot of SMEs run into trouble. They don't control their costs. They just make expenses, and at the end of the day, they now try to balance the book and then realize that they're in trouble, and then sometimes they never recover from that. And lastly, while doing your cash flow forecasting as well, sometimes you realize that you have surplus. sometimes it's not good to leave the surplus, leave it idle. Sometimes it's important to find investment outlets where you can invest this surplus. So, for example, you know that, okay, you have surplus of, say, 1 million naira. You don't need that 1 million naira for the next 60 days. There are investment outlets, credible investment outlets, risk-free investment outlets out there that you can reach out to help you. Maybe, okay, invest it for 30 days, invest it for 60 days. Because sometimes what happens is that when that money is idle, you know what they say about idle, when something is idle, you may not know when you might dip into, that money. You may not know when a relative who is in distress would reach out to you, and you then need to, you of course you want to help. But if you've invested that money into something, then it's a lot more difficult. If you've invested that money into something, it's a lot more difficult for your friend to just run into you and say, "Oh, please, can you give me 500K here?" And then, you say you won't be able to say, "Oh, I have the money tied up somewhere." So investing surplus is also very, very important, in terms of how to manage, cash flow. I think I'll just stop at that for now, and take more questions if they come. Thank you.
Thank you so much, Omoniyi. That was a brilliant answer. Thank you for diving in deeply into cash flow forecasting. It was likely to be the next question, but with your, you have almost covered it. So I would ask Dr. Akiwande the next question, which is, what are some common cash flow challenges that SMEs face, and how can they address it? You can see that Omoni spoke a lot about challenges that SMEs face around cash flow management, even though he didn't dive so much into it. So I would like you to tell our listeners how they can avoid those common challenges. Thank you.
Yeah, thank you so much, Ethel. Omoni, Kola, thank you so much for your own words and explanation, and also words of encouragement and acknowledgement. Really appreciate that. But I'll just add to just one word, because Omoni is, of course, an expert in this, is a finance person, that I like I said at the beginning. He understands his numbers and he does it well. One thing that I want us to always keep in mind when we're thinking about things like this is to find the best way to simplify, what naturally will look complicated. The number that Omoni wake up to see on a daily basis, they're numbers that will scare regular human being out of their business, because they're huge number. Even the credit rate, we're talking about credit rates and any of these businesses, those numbers can scare people, but realistically, they're not really your money. They're either money managed, or their revenue. When you look at the net, you now start to see that, okay, the business that seems to be very big, they're actually lean. And one of the phrases that I always use with the team, building the business, that I still continue to use now, is this: you can be fat and be unhealthy, which is like you can have a lot of sales and be unhealthy, whereas you can be lean and have a sustainable, life, a life that will take you longer. So sales is not equal to profit. And that's the reason why financial management, as the beginning, being able to track the fact that what comes in is able to meet and leave behind something when bills or expenses, fall due. And Kola Ole also said something very critical that I just want to punctuate, that you should get the best out of your outflows. So negotiation, also looking at what we call return per naira. For that's ROI, return on investment. Every 1 naira that goes out of your business, what does it bring back? Does it come back like the same, or does it come back with with a child on his back. So you must, it's just that awareness that I have to be conscious when anything leaves no, anything can leave your own hand without you bothering. It's your money. You can do anything you like. But when you call it a business, it has a life of its own. And every business owner must always think about, legacy. What do I leave behind? Because the business should outlive the owner. Otherwise, you're just in a what we call sustenance life, which is the business only to keep me breathing until I drop dead. Now, let me go to the question that you asked me. The common challenges with cash flow for SMEs. I know it's touched on so many of it. We've also talked about the fact that we don't record our daily activities. So cash comes in or we made sales, and cash goes out. How much is left at the end of the day? Forgetting the fact that whatever is left at the end of the day, because you're not managing or planning well, may still be maybe critical expense have not been paid. So you're left with hole that you must block in the next day's sales because you're not tracking your outflow or you're not monitoring the usage of your outflow effectively. So daily recording of our sales, it's just a basic, we sold this, we spent this. And you also must be able to do what is called matching. For some, we're selling a product. Let's say we're selling phone or phone accessories, and then someone comes in and says, we have food, or guy, if you invest in this food, you will make more money. And you use money for phone accessory to buy food. Their conversion cycles are different. So when we don't match appropriately, we run into trouble because the knowledge of selling phone products may be different totally from the knowledge of selling food products and their circle of conversion. So cash conversion cycle means that from the time your cash goes out and the time your cash comes in, and you have to be able to track that conversion. It's very important. Most SMEs don't even bother to track that. And also selling on credits. There is a problem, of course, generally you have customers that are very good to you and you are comfortable with selling to them on credit. Yes, it's okay. But what kind of credit? Because what you're doing is that you've turned yourself to a finance company. So when you sell on credit, you are funding, you are availing them loan, you're lending them money. But we don't see it from that perspective or from that context. So when you sell on credit, you have to also set limits and ensure that there's a steady and strict adherence to the limits you have given to them. And also be careful because the money you don't have in the business is a cost to the business. When you sell on credit, even though you can record sales, but you're also you're borrowing from other sales to be able to continue your business. So you're owing the business in the real sense, if you think about it from that angle. The other thing is also overstocking. And for some people, when I see it now, I just want to quickly buy it. I want to keep it. Or also what we call emotional buying. Someone comes to your shop and say to you that, okay, especially if you deal with Chinese products or some inputs, you may run into this problem. So if you don't know the cycle or seasonality or the process of your business, you will run into problem. And so when Kola was talking about forecasting and Peju was talking about it, it's very clear that forecasting includes you being able to project into the future based on the experience you had in the past. Because most of our SME, owners, they've been in the business for quite some time. But the question is this, they can't remember because they don't have record what the seasonality of their product or their business is years prior and what they should have used to project, which foreign organizations have always used. What they've used to project, they failed to use it because they have no record of their expertise, of their experience, of their know-how. And their know-how has now made them to know nothing. know nothing about how their business is run. Whereas it should be a capital equity. Your knowledge of your business is an equity. Is equity in your business. Your knowledge of business, a value, is a capital you can trade, you can spend. But most of our SMEs, we don't track it because and that affects our cash management. The other one is also the mixing of personal funds with with business funds. We don't separate accounts because of the way we started. We started very small. We're using enterprise, and because it's an enterprise does not require you to have those things separated. But if you don't have the discipline, you will mix it together. You commingle. You spend when you need to spend. Emotion will run high. Problem rises from the family because whatever you can access, you can spend. Whatever is locked in, not in your name, but in the name of either organization or something else, you feel reluctant to touch it. So most of our SMEs also run into the problem of not really defining their own limits or the extent of what belongs to them in the business. The business money is not just your money. It could be credit sales to you. And because you have turnover or revenue, you think it's your money. It's not your money. It's credit sales. It's someone else's money. It's a debt on your business and debt on you. So those are some of the basic elements and separating the accounts, getting the cash box. If all you need to do is just to have a cash box, you can do it. The other one is plan before you buy. Just know that you have to plan before you buy and then set limits and follow strict adherence to people you've given credit to. If they fail to pay you, withdraw their credit line. Don't give them credit anymore. And also be disciplined about when your own debt is also due. And like I said, in Bravewood, we have trackers that you can use to actually manage all these cash flow challenges and make yourself more effective. Thank you.
Thank you so much, Dr. Akiwande. That was a brilliant answer. You did justice to the question. Thank you so much. So I would like to say, unfortunately, we have to take the last question because we are running behind the time. So the next question over to you, Olapeju. So what are the essentials financial skills that SME owners and managers should possess? You spoke a lot about skills that each business owners needs to have. So I would like you to spotlight it while we wrap up the conversation.
All right, thank you very much. So I think for business owners, I don't think you need to like go and study accounting or finance before you can, So there's just very basic things that you just need to know, which is just know how to budget. You understand? Because for you to be able to track things and know when something is going wrong in your business is when you have a budget. If you don't have a budget, there's no way you will know when something is off or something is not doing well. You just feel that the figures is just going up. You won't be able to explain why. So you should be able to explain why some figures are like I mean is more than what it was last month. So there's no but when you have a budget, you know that this I incurred this last month. So why am I incurring double? You understand? So you're able to know why you are incurring double. So if the reason for incurring double is not something that is justifiable, it's not even increasing. Like doctor just explained that when he said that when one is leaving your business, there should be a positive thing coming in for that one that is going out. So if you cannot justify it, then there's no need spending that money. So that's when you have a budget, you'll be able to explain that. You'll be able to know why it is happening. But when you have a budget, you won't know. You just feel like it's just normal business. You understand? Then another thing that you also need to do is to track cash flow. Like I said earlier during the presentation, you can't track cash flow when you are not doing simple record keeping on a daily basis. So when you are doing simple record keeping on a daily basis, you're able to track cash flow. Then of course simple reports, you should be able to understand reports. You should be able to be able to interpret your reports when you have it at the end of the month or at the end of the week. Then you need to also understand profits and also plan ahead. So that's basically what I have. Thank you very much.
So much. So a quick one. I would like each and every one of our speakers to just give our listeners one last word that you want them to take out from this section today. So, Omoniyi, what do you have to say to our listeners, to every business owner out there?
Yeah, I mean, one last word. I think it's important to plan. Cash flow is critical. Cash flow is even more important than profit or loss. If you want to lend money from the bank or from any financial savvy person, I think what they're going to ask you for is your cash flow, statement or your cash flow analysis rather than your profit or loss analysis, because obviously that would tell one whether that business is how long that business is has to survive, and two, whether you are really making money, because you may be making profit, but you're not making money. So I think it's very important to read up courses on cash flow forecasts and cash flow management, or as Ella been said, seek help from those who have expertise. I'm also, into helping people, especially, from a perspective of investment. So if you need help in terms of maybe you have surpluses and you need help in terms of how to invest them or where to invest them, and you can just send an email to cradlestonepartners@gmail.com, cradlestonepartners@gmail.com. That's where I can be reached, if you want, some sort of help with respect to, how to invest surplus funds. Thank you, everyone.
Thank you so much, Omoniyi. Over to you, Dr. Akinwande. What do you have to say to our listeners?
Okay, so I just want to thank you so much, our host. Thank you, Business Day, for the opportunity. And thanks so much, Olapeju Kolawole, for the privilege to share the same stage with you guys. So one thing is clear, not all are called to be entrepreneurs. So that when we say this, everybody should not just carry his bag. There's some people that manage business for other people. If that is your calling, stay there. Because otherwise, everything that we say now will sound as if these guys are crazy. However, if you must, remember, running a business is not magic. It's not about big offices. Thank God life has been simplified by technology. It's not about what you wear, expensive clothing, jewelries, driving big cars, or speaking big English. Entrepreneurs, SME owners, they're some of the most, most humble people you can meet because they defer gratification. True SMEs defer gratification. Reinvesting in your enterprise is one of the hallmark of being a true SME. And waiting until you want to reveal yourself. And not, undermining integrity. I've always said to people, there are about 3 key capitals you can invest in inject in your business. The most important is your integrity, your personality. The next one is your network. The lowest of all that capital is cash. But if you can have if you can build on your integrity, build the right network, those things will bring cash to you. And all you need to do is just to have discipline, have the right team, have the knowledge, use the right tools, ask questions, seek help, keep learning. The best of the people that run the best of the business, they're the ones that always think we don't know enough and they can learn from everybody. So in building a thriving and strong enterprise, having all these elements are very critical. And I also want to say talking about managing surpluses, the few things that we do for our customers. Customers do fall into trouble of not being able to pay their children's school fees. Most of our customers that are into either they're selling phone accessories in the market because we have product like child products, children's school fees, and all those things. They can now plan ahead, maybe about 3 months ahead, 4 months ahead, save up, invest that money. And when you bring your own surplus to us, they work for you on a daily basis. All you need to do is just download our app, and there are several returns you can get from dealing with Bravewood. Thank you so much for the privilege. God bless.
Thank you, Dr. Akinwande. So, over to you, Olapeju. What is that one thing you want our listeners to take out from this conversation?
All right, thank you very much. I think the doctor said it all, and the first person money here as well. So I think there's something I picked from what he said, which was, it's not everybody that's called to be an entrepreneur. That's the truth. There are some people that are entrepreneurial. At least you are meant to help somebody's business. So everybody cannot be an entrepreneur. It's actually very. I see people that want everybody wants to be an entrepreneur, but when they see the wave, they just quit and stop. You understand? Go back to now being an entrepreneur. So I think that's actually very it's that word was actually very, like, it's very, very thoughtful, to be honest. Then another thing that I would just say is basically, when you need help, just pick up. Don't feel that you have to do everything alone as a business owner. That's the truth. There's something that you can't do, that you need someone to help you to resolve. Like, for instance, now, so there's some people that they don't really know how to, they don't like numbers. But I always tell people that as much as they don't like numbers, you need to understand it. You need to understand it. So when you need help, please look for it. Seek help and get help. And like he said, not everybody is going to be an entrepreneur. So stay where God has actually placed you. Thank you very much.
Thank you all for the incredible insights shared today. If there's one key takeaway, it is that running a successful business goes beyond having a great product. You need to be financially intentional, understand where your money is going, how it's working for you, and how to make smarter decisions. So, to our amazing speakers, thank you for your time, for your wisdom. Thank you for sharing your insights with us today. And also to our listeners, thank you for joining us. Thank you for staying true at this conversation. And do have a great day. See you next time. Thank you.